talk about schematics and the phases. Now the phases are these pieces of the schematic, okay? All the phases do is help you break down each section of the schematic and just understand, like, do you have it or not, okay? So all that means is that when I have all the elements, right? BC, AR, ST, M style, everything, do I have all the elements? So the phases kind of help you break down if they're correct. So a lot of times when people are new, obviously, you know, we make mistakes and people are labeling the BC, but then the UT is lower and they're not really noticing that. So breaking it up into different phases helps you kind of stop and make sure you have each layer of the cake. So if you have a previous point of interest, okay, right, like this, and we tap into it. Once we tap in, right, like our alert actually goes off, then we can say, oh, this is a UT, and we start building. So we can say, oh, we have phase A and phase B, and then obviously we're waiting for a test, major sal, etc. So that's what we're going to talk about, kind of just breaking things down, because if you're not breaking the schematic down, that's why you can't find it, or if you do find it, it's kind of wrong. So I'm going to go to the basic distro first. When we are marking up, you guys, your phase A is change of structure. Okay, or sorry, change of character. So right here, it says it indicates an environment in which price will move soon. The first change of character is established in phase A, where price comes from an upward trend environment into a consolidation. And the second change of structure, okay, they're talking about this piece. The second change of character is from a maximum phase C to a minimum of the SAL, in which price moves from consolidated environment into a downtrend environment. So when I first read this, you guys, like, I remember like when I first discovered this Wyckoff book, and I was like, none of this is in English, okay? So I'm gonna try to break it down for you guys in English, and that's how you guys can take decent notes. All it means to me, and how I was pretty much explained, again, if this is the previous point of interest and we're coming up to fill the POY, right, and then schematic down, all that means in terms of change of character, so your PS is your first piece, right, which is, it goes up, takes a break, and then you kind of get your BCAR. And technically, if it's very slight, it can look like consolidation. Okay, and I'm going to redraw that actually, because I feel like I can explain it a little bit better, but I need a thinner piece. Okay, so again, this is your previous point of interest. Okay, so imagine we're in this down structure, and then obviously we're in an up structure, and these very massive momentums, and then we kind of come really close to POY, and then it kind of consolidates. So it's not a perfect consolidation as an equal has an equal lows, but you can tell that we're getting a reaction, right? Because the market moves in expansion and consolidation, right? So that's what the change of character means, okay? So again, thinking a little bit retail. Okay, so again, in terms of retail, instead of using a ceiling, we have a previous point of interest, right? So there's a gap over here. So instead of thinking, okay, we get up to a ceiling and we're getting rejection, it's kind of where we're feeling the imbalance and getting rejection. So again, it's just where price really starts to slow down in an area. So that's what change of character really means, okay? So if this is kind of confusing, this is what it means. So do you guys have any questions about that? So all it means when it says change of character is the changing from expansion to consolidation environment. And we're technically consolidating, quote unquote, in a previous point of interest. So that's why if you guys, let's just say, and if we go to the charts and we'll go to something random.
Hi, my name is Savannah Parsons, and here on YouTube, I teach institutional trading. So are you tired of trading these head and shoulder patterns, flag patterns with 30, 40, 50 pip stop losses, and you wonder why you're not making money? It's because you're not trading like the banks. Yes, trading like the banks, trading like the institutions, institutional trading. So I teach smart money concepts. What is smart money concepts? It's imbalance, order blocks, and Wyckoff. This is exactly how the banks are trading. They're not trading these crazy cat, dog, and mouse patterns, okay? If you want to learn how to constantly have a 10 pip or less stop loss, trade only 1 to 10s, and be extremely profitable, then I want you to check out my videos here on YouTube. And if you like what you see, also join my free group chat below. And if you're really getting value and you want to elevate your trading, I actually have my own academy called smartmoneyacademy.ca. So if you click the link to my website and my free group chat, you guys will understand how the banks are actually trading, and you can actually make more money in the market. So for now, check out my videos here on YouTube. Don't forget to like, comment, subscribe, and I'll see you guys in my group chat.
Okay, well, this is the example I'm going to show you guys anyway. So let's go somewhere else. So like we have this expansion here, right? And then we have this reaccumulation. So this, would be your change of structure, change of character. Why do I keep saying change of structure? Okay, let's see. I don't know if it's a reaccumulation. This is like a random spot that you guys just see me pick. Looks pretty much like a reaccumulation if you ask me. And the reason why I'm able to detect these so quickly is because, yeah, change of character. So price is expanding. If this is an expansion, like there's no way, obviously, this is not a buying climax AR, ST, MSAL for a reaccumulation. That doesn't make sense, right? So if we're looking at this, this doesn't look like a schematic, right? It's just up movement, down movement, up movement, right? Down movement and then up. And this first drop and then come up and then the drop again is telling us that we could possibly get a BCAR, right? AKA a schematic. So drop a 1 if that makes sense. So that's why when we're scrolling for backtesting, which we're going to do this week, but that's how you find schematics, because you're obviously, there's no distro in here, right? There's going to be a distro here if there's a distro. For accumulation or reaccumulation, it's going to be in here, right? Distro or redistro maybe in here, but I can tell it doesn't align. I can tell there's nothing in there. This could be something, this consolidation right here, right? With this as a fill. So when I'm showing you guys, this first piece right here is going to be your change of character. This up movement, it stops and starts to consolidate. That's the change of character. This, even though this didn't work out, I already can tell. No, what happened? Oh my God. Oh, I lost my replay. So hopefully that makes sense to you guys. Let me check the chat because I told you guys to drop some 1s. When we're on the chart and let's say we're doing live analysis, right? So again, watching the price here just go up and expand, take a break, and then now it's consolidating, right? Because if this is a PS and this would be BCAR, then this is pretty much consolidation. So I'm getting highs, but I'm getting new lows, right? And all the schematics are going to give you highs, but you're going to get some lows. And then your trading range is pretty much your support resistance, right? Obviously it doesn't get respected and you go above and underneath, but that's where people think support and resistance works, because technically you can try to put it on top of a schematic and say it works, okay? So our change of character, we don't need this PS really in this situation, but if you wanted to, it'd be like that. And I actually have this saved as a template, CHOC. Okay. So that's phase 1. Now let me go to my example.